There are a few questions I ask myself before I buy any property, and over time I've realised that the quality of your investing decisions usually comes down to the quality of the questions you ask before committing. Because most bad deals happen because important questions weren't asked early enough. I've seen investors get caught out by poor cash flow, difficult management, expensive refurbishments, bad tenant demand, restrictive leases, unrealistic rental assumptions, and properties that just became difficult to exit later. And usually the warning signs were there from the beginning. They just weren't properly explored. So in this video, I want to walk through 7 questions I personally ask before moving forward with any property deal. Not because these questions guarantee success, but because they force you to think properly before committing money. And honestly, this is exactly why I built the CORE Toolkit in the first place. I wanted a consistent process that stopped me making emotional or rushed decisions. The first question I ask is, what does this property realistically produce after all costs? Not headline rent, not estate agent projections, realistic cash flow. Because there's a huge difference between a property generating income and a property actually producing strong returns after mortgage costs, maintenance, voids, management, and everything else is accounted for. A lot of investors accidentally analyse best case scenarios instead of realistic ones. The second question is, how operationally intensive is this going to be? Some deals look great on paper but become exhausting to manage in reality. A single let or a HMO are going to be different to compare to between themselves. And I think investors massively underestimate how much operational complexity affects long-term enjoyment and performance. The third question I ask is, what could realistically go wrong here? Not because I'm pessimistic, because I think proper investing requires pressure testing. What happens if rate increases? What happens if refurbishment costs overrun? What happens if the property sits empty for longer than we expect? Strong deals usually survive imperfect conditions reasonably well. Weak deals often collapse very quickly once pressure is applied. The fourth question is, am I relying on assumptions to make this deal work? This one catches out a lot of people. If the deal only works with perfect occupancy, optimistic rental figures, or unrealistic growth assumptions, that's normally a warning sign. A good investment shouldn't require constant justification. The fifth question is, would I still want this property if the market slowed down? Because markets move all the time. And when the market becomes more difficult, weaker assets usually become exposed first. That's why I always try to understand whether I genuinely like the underlying asset itself, not just the numbers attached to it. The sixth question is, who am I eventually selling this to? This is something many investors leave until far too late, but exit flexibility matters. A standard family house gives you a much broader buyer pool than certain highly specialised investments. And finally, the seventh question I ask is, am I making this decision emotionally or objectively? Honestly, this is probably the most important one because excitement can distort analysis very quickly. A property looks attractive, the numbers seem close enough, and people start convincing themselves a deal works because they want it to work. That's why I think having a structured process matters so much. It slows your thinking down and creates objectivity. And that's really what the CORE Toolkit is designed to help with, not making decisions for you, but helping you make clearer decisions yourself. If you want the full templates, frameworks, and analysis process I personally use when reviewing deals, they're all inside the CORE Toolkit. And if you're newer to investing, I honestly think learning how to ask better questions is one of the most valuable skills you can develop early on. I look forward to seeing you in the next video.